All right, 403, let's get started. Hello, friends. Thank you, Miss Lo-Fi Radio. How's everybody doing today? Hope you're well. Hope you're enjoying the ongoing roller coaster ride that is crypto. It's been another crazy week. Every week we talk and we try to speculate what craziness does the next week hold. But uh, this past week or so has been particularly crazy. We've kind of been dealing with this ongoing fallout of another centralized exchange having issues with failing to not just manage risk, but doing utterly awful things with people's money and not basically being fraudulent. It's certainly stressful from maybe a price point of view. You know, if you're looking at prices every day, you're looking at your portfolio and say, oh God, this bear market sucks. This isn't making it any better. The stock market has rallied on news that inflation seems to be subsiding. Prior to this FTX clusterfuck, this likely would have inspired a nice rally in the crypto space because crypto is quite sensitive to this rising interest rate environment. Of course, that hasn't happened because of all this. The big question now is, okay, what else will be impacted by this? I think the answer is many more centralized entities will be impacted by this. And that of course, could hamper the space and its finances in the near term. I just saw today another example of a centralized lender that's having issues. So, certainly some headwinds, but I think the thing I want to stress here is this ultimately, and I really believe this, I'm not just being like blindly optimistic because, hey, I have crypto, but over the long run, this is actually good for the stuff we're working on here at the DAO and for decentralized crypto. It just really underscores the value of having actual decentralization, namely, the platforms built on protocols like Ethereum that where no third party can abscond with user funds, or if you're trusting a protocol to hold your funds, you can see that those funds are actually there. You can verify precisely down to the cent the claims of any protocol that they say we have XYZ funds. You can verify that on chain. That's precisely what we have with our dashboards here at the DAO. Even without digging into those, somebody can go to Etherscan and check out our, look at our treasury on the mainnet and on Gnosis chain and see, pretty closely how we're doing. Of course, digging closer or deeper into our dashboards that Darwin built out, there's even more detail. But it's such a powerful contrast to the opaque world of centralized finance. And, we've seen that get conflated with sort of crypto in general, and especially in the media and people who don't follow this space. But in fact, that centralized stuff, even though they might custody crypto assets, that's just a throwback to TradFi. That's just the same old shit we've seen for decades. And, that it's just the stuff we're seeing now is just another instance of another Madoff, another WorldCom, another Enron. We've seen this a zillion times. The thing is, it won't happen again with, it can't happen with DeFi. Not to say people won't get rugged. That's certainly a different sort of issue, but what we're seeing now just can't happen in DeFi. So it makes me more inspired than ever. The other good news that happened this week is the House of Representatives will be controlled by the GOP in the coming term. Now, I think the Republican Party has a lot of bad features, but with respect to crypto legislation, this is a big one, big fucking deal, because Congress is collectively debating very seriously now, especially in the wake of this FTX thing, but even before that, really very keen, I think, on regulating or passing laws related to things like stable coins, which agencies have purview over crypto, whether securities or crypto securities, and all these types of questions, very fundamental things that I think will dictate the direction of the space, and also dictate, like, say, institutional investment in the space. A lot of really big picture stuff. The regulatory landscape should be much more favorable because of that. And now, it doesn't mean it's not a panacea. It doesn't mean everything is hunky dory, but it's just, I think some of these regulatory headwinds will subside now, and the timing is good. So my whole point is just, don't look at day-to-day price action. The important thing is, look at these bigger trends on the macro level. We may be entering a less hostile interest rate environment, which is really, that could be promising if the rate cuts sort of begin to subside. Anyway, the other thing is, this is all in the context of what the DAO is building, and we don't have a runway so we can just sort of sit around and hope something happens. We have the runway so we can build powerful, awesome shit. And that's exactly what we've been doing as a DAO, over the past year, and especially over the past several months, just working through this mean and lean sort of bear market posture here. We have an amazing platform that's getting better by the week. And of course, the DAO's been incubating FoxChain/Archeo, which is further or closer to production now, and just incredibly exciting. So, I just wanted to preface all this tokenomics stuff with that. Like, if you zoom out, things are looking really, I think promising, despite this bear market stupor that we're in right now. So let's talk runway here. I posted that in the stage chat. I've updated that. This is actually an update as of yesterday. Pardon me, I wasn't able to give an update this morning. So I think our stables are slightly less today. But I've also added some new tabs here, and we'll walk through those. So in terms of our runway, again, this is following the reduction of our monthly budget, owing to the fact that FoxChain is no longer asking for funds. So currently our runway is out to it's basically out to August of 23. Probably not so much September anymore, since we've spent a little bit of stables, but effectively that's where we're at. And I think the DAO is doing a good job of maintaining that runway over time. One thing that's allowing that to happen is the fact that our payments towards the Rari Pool 7 have been funded exclusively by ongoing bond proceeds from Olympus and bond protocol. We'll cover that shortly. Just the impact of having the reduced spend every month. You extrapolate over that time, you drag that number down, and you think about it, like a savings of 10K a month saves the DAO over 6 figures over the course of a year. So good stuff there. I also added a few definitions here for those who aren't familiar. But again, boosted Fox refers to the percentage of contributor salaries being taken in Fox instead of USDC. 5% is used as that estimate because that hews pretty closely to what people take every month, although it's not precise. And then, of course, our Pool 7 interest, that's payments towards only interest but not principal on Rari Pool 7. And we'll cover that next as well. In terms of the additional tabs, so this was a interesting suggestion from one of our bond partners. I believe it's Arbor. As the DAO moves closer to potentially issuing these longer term bonds, the thought was, what might the runway look like if we factored in more of the DAO's assets, like maybe it's Fox, or also considering revenue. So the next tab, let's take a look at stablecoins plus revenue. This is the gross revenue for October, and let's just say that continued to be our revenue every month. You kind of see the impact that has on things. revenue is something that we haven't talked about lately, but our validator partnership with TaxiStake remains active. That's a big deal. It's allowing the DAO to generate revenue every month, and of course that's not considered in the regular the runway here. So if you factor that in, if that were to actually be the case over time, we're grossing that much. That pushes us out into November. Of course, that's not net revenue. There are expenses, but this is sort of assuming that maybe those expenses can be dealt with. Just some interesting planning. The next tab that shows stablecoin plus the value of Fox at current prices. So if you factor that in, then we're looking at a runway out to like early 2027. The thing I want to stress here, though, is like this is not like necessarily a realistic projection. The DAO is not about to sell all its Fox at current prices, and if it did, of course, there's not enough liquidity to support that without tanking the price. That wouldn't be probably a realistic option. But it is worth noting that the DAO does have additional assets, mostly in Fox token, on top of the crypto. And it's also something to be mindful of in the event that the market does turn around. We would be in a situation where the DAO had a much larger treasury based on Fox over time. The next tab includes even more assets. So this basically is the DAO's entire crypto treasury. That means Fox, ETH, stablecoins, as well as the different tokens that represent positions on, say, Uniswap or LP tokens. That's like 15 million, and of course that pushes the runway out further. Again, this is sort of just a useful exercise, but I think the main point here from doing all this is just to realize it's sort of a reminder that the runway we plan around and focus on. The nice thing about that very first tab is it doesn't actually require any assumptions, because we know unless something were to happen to that USDC, it gets blacklisted or something. We've talked about those risks before, but short of that, this is something we can count on. We don't have to make any other assumptions. But if you look at how things are, maybe look more in terms of like the actual treasury, the DAO does have potentially longer runway if it were to rely on some of its crypto, or just to bump over to the fourth tab there. That's the runway with 150K a month towards Rari Pool 7. This is actually mirroring precisely what we've been doing. Again, taking those bond proceeds and putting them towards the Rari Pool 7 without having to impact our stable stack. That pushes the runway out to like November. So if that continues to be the case and we get the loan paid off in about February, that's kind of more what we're looking at. So essentially, the DAO has around about a year of a runway. Is that sufficient? That it's hard to say. The last bull market or bear market lasted 3 years, roughly. We're only a year into this one, but this is kind of where we're at currently. So cool. Yeah, glad you like those, John. If you guys have any further questions on these, just let me know. But it's good to think about different scenarios. And another thing is, like, it's important not to get too caught up into bear market thinking. Just like it's at the top of a bull market, it's very important to think about what could go wrong. At this point, in addition to planning for maybe the worst and not making any assumptions, it's also important to plan for like what could go right, because a lot of people are not thinking that way right now, and that contrarian thinking could be very powerful in this type of environment. Let's see. So now that we've taken a look at the runway, let's check out the Rari loan. I posted that in the stage chat as well. So right now we're at 406,000 FEI remaining on Rari Pool 7. That follows a payment that was made 4 days ago. There will be another one made this week, which will bring us down closer to, well, I guess that would be closer to 360. So, steadily we're making progress on this. One really nice facet for the DAO about this loan is, and this is something we haven't really seen in months, is that the APR on this thing has dropped to 45%. And it doesn't appear to be bouncing up. It's kind of trending down right now. It was more like 105 or even slightly above that for a while, and that was like the status quo, a 3-digit APR, which is brutal in terms of interest, and really underscores why it's so important that we bring that principal down. But at 45%, it's much less interest. That's great to see. Even if it spikes back up, we remain on track to get this thing paid off. But it's nice not to have these high interest payments as we move our way towards getting this paid off here. And again, given the current, assuming that we're putting 150K a month towards this, the DAO would pay this off in about January, maybe early Feb. However, it's worth noting that currently the rate of payment has been more like 50K a week, which of course would have this thing paid off sooner. It'll be nice to have that completely done and not have to discuss this pesky Pool 7 anymore. So of course this also relates to our discussions with Arbor and Hourglass. As a reminder here, these are two separate but very related long-term lending platforms where the DAO could potentially issue long-term bonds, much longer term than other alternatives that might exist, and in a big contrast to Rari, which of course isn't really, you can't take new positions on that now, but there is no liquidation points. So there's some important differences here in terms of the lending dynamics. Based on those, the TMDC has been moving closer to bonds being offered via those platforms to counterparties. The use of those bonds potentially, maybe for up to like $1 million. If that's the case, if there is sufficient demand, the idea would be to take those funds, immediately pay off the Rari Pool 7, and then save on about 30K of remaining interest. Also get back 80 million Fox out of Rari Pool 7, which that's a substantial amount of Fox being exposed to just one, all the risk around one smart contract, which granted has been fine for many months now, but it would be great to not have that risk pooled in just one contract. The risk would instead be split between Hourglass and Arbor. Although even then, even with over collateralizing, we're not looking at, I don't think, a total of 80 million between those at current prices. So things are moving forward on these. A shout out to both of those teams who have been really helpful in terms of just providing recommendations and next steps. These are novel platforms. They're pretty much brand new. This would be a departure in the DAO's general strategy in terms of engaging with them and using them right off the bat, because there is a higher risk of higher smart contract risk due to that lack of Lindy effect. However, we've done some internal looks at their audits. Thank you to Ocean for looking at those, and feel comfortable moving forward. So that's kind of where we're at now on those. Before we jump into the next segment, just want to pause here. And by the way, guys, it looks like we may have a little extra time today. So if anybody wants to jump up at the end of this and do a little open mic jamming and talk about whatever, we have time. We also have a special guest today. Before I bring him up, I just wanted to give a brief mention of the Fox chain proposal. So this was taken live on Metaforo last week. John, is that going to go in ideation soon, or does that remain in draft for the near term? Okay, John says a few more comments, ideation probably tomorrow. Excellent. So that's moving along. but again, this is really outlining the next steps for FoxChain, or the tentative name of Archeo. The big takeaways tokenomically, I think that's a new word, tokenomically, are no proposed spend from the DAO. Again, that's why there is no line item for FoxChain moving forward, at least currently. It does not propose any spend from the DAO. And of course, the airdrop has implications for Fox holders. Currently, it's looking like if you hold Fox in any form, whether it's in a hedgie, we'll talk more about hedgies very shortly here, whether you hold, like just regular Fox, whether you have, maybe you were getting a Sabler stream and then you've actually pulled that Fox out just into some other account. Wherever your Fox exists, generally the direction is that will be eligible for a Archeo reward or airdrop, and get exposed. You'll get exposure to that token as well. So a lot of thought and really interesting, like sort of in-depth thinking has gone into all those factors. So it's just super cool to see that coming to fruition. And then finally, I wanted to also mention the taxi stake discussion. Taxi stake is an important contributor to the DAO's monthly revenue. And then in that discussion, it's mainly sort of talking about trying to strike a different balance potentially between on the rev share between taxi stake and the DAO. But definitely give that one a look, because it's a important consideration that will become a lot more important if the Cosmos ecosystem rallies price-wise. I saw that Prop 82, which is sort of outlining the next, basically sort of outlining value accrual mechanisms and some other architectural changes to the Cosmos Hub, it failed. I saw some compelling reasons why voters, or why Atom holders shouldn't vote for that. I'm actually haven't been following it super close, but keep an eye on how that progresses, because it sort of will dictate, I think, the next steps in Cosmos. So yeah, that's kind of the main stuff here. I'll pause real quick if anybody has any thoughts or comments before we bring up our guest. Okay, cool. Pardon me. Let's talk Nifty Apes. Captain Seagraves, bring you up on stage here. So I want to put this all in some context here. I mentioned a few weeks ago that there is a new protocol that could be highly relevant for holders of Fox hedgies, of which I include myself as well. A lot of contributors have chosen to take these hedgies, these time-locked hedgies, as a way to get more Fox than they would otherwise. Of course, that has a very nice impact on the runway, a positive impact, because it's less of a stable spin. So Nifty Apes is a platform that allows borrowing and lending on NFTs, including possibly hedgies. It's founded by Kevin Seagraves. Kevin is a friend of mine from the Denver Boulder area. He's an OG. He's been working in this space for a long time, and it's so cool to see Kevin working on this right now. So hey, welcome to the Discord, Kev.
Awesome, thanks, Kent. Really appreciate the opportunity to be here. So thanks, and thanks everybody listening.
Yeah, and also congrats. It was so cool. Like I was talking about this concept, and then I think it literally was the next morning that news of your round came out. So can you just remind everybody, like what kind of are the big headline details of that round?
Sure. So the round, we actually closed it in February. We just announced it 2 weeks ago now, 2 Tuesdays, and so we raised 4.2 million. Leads are Variant Fund and FinTech Collective. We've got Coinbase in there, Polygon, the Lao, Flamingo DAO, Robot Ventures, and the Bankless guys, Anthony Sassano, the CTO and head of strategy at OpenSea, and C-suite at Super Rare. So among other high profile groups. So really stoked with the investor round, and really excited to now be out in market. We can actually show it to people, talk about it, and go after product market fit.
Awesome. Yeah, curious to hear a little bit later in this chat plans for what you might do with those funds. And also nice timing in terms of locking that up before the price action really declined. I imagine getting it raised right now would be a much more challenging endeavor.
Yeah, we timed it really well. We like locked terms right at the peak of the bull, so we're pretty fortunate.
Awesome. Just in terms of introductions, what's your background in this space?
Oh yeah, sure. So I started building back in 2017. I started the Ethereum Boulder meetup and made friends with Kevin Owocki, and that's how I met Ken through the Ethereum Denver meetup. And yeah, I got to contribute, to the really early alpha versions of Gitcoin bounties before it was called Gitcoin. And then, Kevin and I went off and won a hackathon. That got me a job at the Boston Consulting Group. So I was doing stuff with like the World Wildlife Fund and the De Beers Group, doing like natural goods tracking. And then after about a year of that, I started the e-security community. So there's still an e-security community Telegram channel where all the major like security exploits are kind of coordinated around. And then I had the opportunity to come back and build the first version of Gitcoin grants. So V0, we launched that in early 2019. Like it felt a lot like right now, where everything is on fire. There's a lot of fear. Uncertainty about what's going to happen. It's actually pretty remarkable how kind of sentiments are similar. And so yeah, launched that, and then went off and started another company called Charge. After there was no more funding at Gitcoin for me, so we were doing credit cards in the blockchain. The main use case was how can you purchase an NFT with a credit card. That eventually pivoted to a more traditional fintech app around virtual cards, because people didn't care. Like 2019, no one wanted to buy an NFT anyways at that point. So yeah, eventually left that in March of 2021, and then eventually started Nifty Apes later in the fall. So yeah, that's my background.
Awesome journey. Never a dull moment in crypto, especially if you've been in the space for a while. I remember meeting you and Owocki for the first time. I think we were hosting an Ethereum Denver meetup, and that was in the ICO bubble when we'd have like 150 or 200 people come out to these things. Big deal. And we were also hearing about like all this buzz, like, hey, there's like this meetup in Boulder that's killing it also. And then you guys came down, and it was like, oh, cool.
Yeah.
And it kind of felt like uniting our communities a little bit. And
I think it's been Prism. Prism had just gotten announced, and Rain gave a talk on it, I think, at that meetup.
Oh yeah, yep. That was a fun time. Prism was a cool product too.
Really.
So yeah, fast forward to 2022. Here we are, still rocking out in crypto. So in terms of Nifty Apes, I gave a very cursory, high level sort of explanation, but it'd be much better out of the horse's mouth. Kind of like, what problems are you trying to solve with Nifty Apes, and how are you going about doing that?
Sure. Yeah. So Nifty Apes is an NFT collateralized lending protocol. Right. So someone owns an NFT, and a lender can make an offer, they match, and the NFT owner can borrow against it. Right. There are some competitors kind of doing this already in the PFP art space. And so we are in that market as well. We're trying to explore other opportunities. I'll go into kind of the core mechanism and how it's differentiated. One is we're solving a lot of the frictions in both peer-to-peer and peer-to-pool mechanisms. I can go into more detail if people are interested to hear. But we are it is technically a peer-to-peer fixed-term loan, so there's no liquidation risk. But what's cool about Nifty Apes is we use a Harbinger-style lending auction mechanism. So this is something we've created. It's basically a secondary debt market that's native to the protocol. So we've turned loans into a public good where no lender ever owns the loan. And any other lender can buy out the loan at any time if they're willing to provide better terms. So now capital has to compete to maintain exposure to this line of revenue. So they have to continually reprice the asset over time in order to maintain that exposure. So borrowers now have the experience of automatically improving terms over the life of the loan based off this market competition. And this helps with pricing, not only pricing the asset itself, but pricing the risk on the loan. And it creates kind of a win-win-win situation for all players. Lenders can actually buy into exposure that they wouldn't otherwise have, as well as getting better pricing data. So that's kind of it in a nutshell on how the mechanism works. I know that's a lot to consume really fast. I'll pause there, and then maybe we can talk about how it applies to hedges in a second.
Yeah. Let's talk about the protocol itself a little bit more. So that's a kind of a fascinating like statement, just to say loans can be a public good, and you're asserting that these loans are public goods. Can you kind of dig into that a little bit more? The idea of public goods is sort of familiar to anybody that's even dabbled around in sort of the the Gitcoin type space. But what do you mean when you say these loans are public goods versus, say, maybe regular loans?
Sure. Yeah. So the way I'm framing the public good statement is, right, these loans aren't owned by anyone. They're held in partial common ownership. So they're just part of the protocol. It's kind of like it's like a stoplight almost, arbitrating who has access to what at any certain time under what conditions, right? Hey, we're showing a green light in this direction. This lane of traffic now has the ability to use the road. Much like this protocol, or these loans are now like, hey, this lender is providing the optimal terms. They can now take over the loan and service that debt and have exposure to interest payments, or if the borrower defaults, exposure to the asset. And if somebody else can provide better terms, then they take over that loan and assume that line of revenue. So that's kind of what I mean by a public good, and that there's no lender owns it. They can't opt out. If someone wants to provide better terms, they just permissionlessly refinance the loan. And the borrower doesn't have to do anything. They just show up one day and their terms have improved, either a lower interest rate or a larger line of credit or a longer repayment period.
Very cool. Another interesting facet of Nifty Apes, I think, is and this is something it took me a minute to get my head around, is having been like really geeked out on like the Oracle space for a long time in like 2020-ish. Like I thought, well, how are you bringing in information about like pricing around these various NFTs? I have seen like oracles for NFTs being used in different contexts, but an important differentiator here is price discovery is not something that you have to worry about, like you being Nifty Apes, because that's just up to the various lenders and borrowers. They're dictating the terms. So the market basically takes care of price discovery, and you don't have to worry about oracles. Am I stating that all correctly?
Yeah, correct. Yeah, so there's like the cold start problem. So first off, you're totally right. We have no oracles. There's no like liquidation risk. We do surface that information to lenders and borrowers as they're executing these loans, but just as like contextual information. It's not the protocol is not opinionated, and that's entirely by design, because otherwise it's gameable. A lot of, especially NFT collections, you take a 10,000 PFP collection, like that's not a lot of volume or liquidity, and it doesn't take that much capital to begin to move prices. Maybe the top 10 collections have enough robustness in them, but below that, it starts to become a really difficult problem. And so, yeah, the cold start problem is you do still have to price the asset on loan origination, right? A lender has to say, here, this is what I'm offering, and a borrower can say, okay, I accept those terms and initiate the loan. But following that, you have this market dynamic that actually drives towards the true market valuation. So yeah, it's a pretty neat mechanism for sure.
Yeah, and I think it might be helpful to understand that mechanism, maybe considering like actual instruments, perhaps like Fox hedges. So maybe we can dig into a few more questions around that. But moving on to like the actual, how this might benefit holders of these hedges. kind of what are the thoughts around that?
So how these apply to hedgies?
Yeah, and I guess given the audience here, specifically like the members of the ShapeShift DAO or anybody else holding Fox hedges.
Yeah, totally. So hedgies in general, let's cover those value props first, is the way that I understand them, and you can tell me if that's valid or not. So for the DAO, it increases your runway, right? You're spending less stables, so that's a good thing. And it's also keeping the price of Fox up, right? People aren't going out and just dumping on the market to get stables, so that's cool. The borrower or the holder, the hedgie holder, gets to increase their exposure to Fox and really gets like kind of like a governance boost, right? Like if you understanding of Shapeshift is if you for every 3 months you lock, you get an additional 5% match. So if you let's say you lock it for 18 months, you have a 30% match. That's like a it's a 1.3 voting power what you would otherwise get on whatever you're allocated, which is pretty cool. And then it also puts you into I know that Shapeshift and taxes, don't always get along, but it does put you into a different tax bracket if that's something you're considering, right? Short-term cap gains or income versus long-term cap gains. And so that's a pretty interesting set of features for both the DAO and for people who want to accept these hedgies, right? Giving you long-term incentive alignment with the DAO, giving you long-term upside exposure, and these other benefits I've already said. So that's cool. Just having a hedgie is pretty rad. If you lock it for 18 months and then you consider the tax savings, quote unquote yield, you're basically, it's like a 50% yield on Fox, essentially. Of course, you're kind of taking a call option, like you're betting on the price of Fox going up. But if you believe in the DAO and what you guys are doing, then it all makes sense for sure. So that's a pretty attractive value prop. And then what Nifty Apes is doing, and what we're talking about with hedgie, is actually allowing hedgie holders to borrow against their Fox hedgies. So now you can get liquidity for the value in your hedgie now and use it for basically increasing the the time value of your money. So you can go out and seek another yield or put it into a DeFi yield farming strategy or pay your rent or whatever you need to do. And what's cool is I think we're going to be able to, I don't want to, there's no commitments yet, but we're in conversations with a number of large, very liquid DAOs and potentially ecosystem level kind of funds who want to encourage this type of activity, right? Because it means potentially more capital in their given ecosystem. There can be pretty friendly terms on these kinds of loans. So that's kind of the value prop for Nifty Apes. Like hedgie is a great thing already, and then how can we extend that functionality and give people liquidity now to go out and be a degen or remodel their kitchen or whatever using those hedgies.
Cool. So what would it look like? Okay, let's say I hold a hedgie and it's currently valued at like $3,000. I have $3,000 worth of Fox and like a hedgie. And I'd like to unlock that value. I would send it into the smart contract that you create, or kind of what are the basic high level steps for how that process works?
Yeah, well, so you already have a hedgie, so you can either create a new hedgie, or if you can, or you're allocated a hedgie as part of your compensation monthly, right? And that NFT just can natively be used inside of Nifty Apes. So right now we're going to deploy on Gnosis hopefully in the next day or two, and then we'll be querying kind of the hedgie NFTs directly. So you'll be able to just connect your wallet on Nifty Apes and see the offers you have available on your hedgie, and take out a loan. So you can do it either way. You can either keep the hedgie you already have allocated by the DAO, or you can create another one if you'd like to up your exposure that way.
Cool. And great to hear you guys are deploying on Gnosis Chain. That was a really good question that Willie brought up recently is, these hedges exist on Gnosis Chain. Much of the DAO's financial activity takes place on Gnosis Chain. That's where like our internal, budgets are for the various work streams. And that's where contributors get paid out, whether it's just regular Fox or hedges currently. But you will have a native presence right on Gnosis Chain. That's great to hear.
Yeah, totally.
Willie makes it. Sorry, go ahead.
Yeah, I wanna touch on Willie's points, and there's also just kind of like the form factor. You can take it in a couple ways. You can either like kind of seek a longer term loan, like, hey, I want a loan for 6 months, 180 days roughly, right? Or you can do we're basically building out a line of credit essentially, so it's rolling month to month. It kind of optimizes risk in different ways. If you want a lower collateralized loan, you can take out a longer loan because there's more like basically volatility risk for the lender. Or if you're willing to take a 30-day loan, you can basically roll that over as the borrower month to month, which provides a higher collateralization ratio and time boxes your risk on like large price movements. So it's a pretty cool experience. It's almost like a credit card where you are taking a loan against your hedgie that you're paying interest payments on each month, and you can kind of roll this loan out for as long as there's an offer available, and spend that capital. So I just wanted to kind of point out those different possibilities for form factor, and then I'll pause there, and then we should address Willie's point.
Yeah, the liquidation, the lack of a liquidation risk, that's interesting. That's definitely, I think anybody that might consider using this, they immediately maybe breathe a sigh of relief and say, oh, okay, I don't have to worry about that, because worrying about liquidation risk is real fucking stressful. But what is the kind of worst case scenario here? What could actually, well, let's say you are lending out one, a hedgie, and maybe the price of the quote underlying drops. Maybe Fox is dropping. What does happen? What can sort of like, if the market dynamics are working against the lender, what happens? It's clearly like, okay, there's no liquidation risk, but what is sort of the risk to the lender in that case?
Yeah, so the risk to the lender is that the borrower defaults, at which point they take over the hedgie, right? And that can be, it depends on how long it's locked for, right? So there's another vector of risk there for like, oh, carry risk. If someone defaults on their loan, now I have to wait for this hedgie to unlock, right? If it's, let's say you locked it up for 18 months and you default on day one, they would have to carry that for that entire time, which is a burden for that lender. Generally, you can mitigate that with collateralization ratio or again timing of these payment periods. We were doing a user interview with someone from the ShapeShift DAO, and they were like, yeah, can I do like every 7 days? It's basically that's shortening the time window of which the lender is exposed and can reprice that loan. One thing they can do is like, oh, the price is moving down. You essentially can, whatever the next payment period is, they could basically adjust the offer to maintain a certain collateralization ratio, and where it's the borrower could make a partial payment to maintain the loan from that particular lender, or they could, maybe there's a better offer from someone else. So there's a couple different levers that people can pull to kind of mitigate risk and keep things near status quo. Does that answer your question?
Yeah, and then so from a borrower standpoint, they do run the risk of, if there's a default, losing their NFT.
Correct.
Yeah, which allows this whole mechanism to work. The fact that that's you can trust the smart contract code to make that happen, and
yeah, and it's a trade-off for like if you're doing like a more DeFi style money market thing, if you get liquidated, it liquidates you down to the point where you're back at a healthy collateralization ratio, typically, like at a high level. We don't quite get that as much with these NFTs. We're definitely considering that, thinking about, okay, well, could there be potentially an auction here where the lender's made whole first and then the rest is given back to the borrower? Definitely possible. It's harder with kind of lower cap quote unquote lower value or higher risk assets, I think people would probably put Fox in that category as far as as far as lenders are concerned. So they want a few more concessions on how things are liquidated or how they're what are those trade-offs.
Cool. And does this platform borrow like kind of conceptually from any sort of specific DeFi project? Of course, there are a lot of lending and borrowing projects, and also is the code based on some sort of related DeFi projects?
Yeah, so we're actually built on top of Compound on the lender side. So how it kind of works is the lender comes to the protocol, they deposit capital. That capital is put into Compound underneath, so they're always earning a passive yield on their stables. On Gnosis chain, we're basically deploying a kind of a dummy. There is a Compound. There's going to be a C token because that's how we keep balances, but there's not going to be the ability to borrow. So there's not going to be any interest earned on Gnosis chain currently. Anyways, the lender comes, they deposit capital, earning this passive yield. Then they can make an offer on any asset or collection of assets in existence. This could be a hedgie, or it could be all 10,000 Bored Apes at once, or these 10 CryptoPunks, etc. And then they just are basically creating standing offers that a borrower can now come and execute a loan against on demand. The contracts do support a borrower making an offer and a lender coming and accepting it, but it's a much more frictionful UX, at least for kind of the native NFT ecosystem. It makes a bit more sense with hedgies, so we might be coming to that a bit sooner. And then, yeah, once the loan is active, you have that market dynamic where any lender can buy out the loan anytime, and the terms automatically improve.
Cool. Yeah, it's interesting that you guys aren't necessarily creating an entirely new thing here, but sort of borrowing these concepts and making them more applicable to just the NFT space, which is very elegant, I think. Okay, so just looking at the stage chat, PTT Cruiser says taxation is theft. Fuck yeah, indeed, brother, it is. Willie Fox says, worth noting that the DAO could even consider providing stables to earn yield and provide liquidity for Fox hedgie holders. Yeah, that's a really interesting idea, sort of like maximizing or earning more on the stables we hold via this platform.
Yeah, so there's actually 2 points for the DAO to kind of interact with this. One, it's to be a liquidity provider. And as Billy says, like, yeah, if contributors of the DAO are taking out these loans, let's just say 15 or 20% APR. That's 20% annually. Let's just use that for ease of math. It could be Nifty Apes or some other ecosystem liquidity provider serving those loans, or it could be the DAO itself. And the DAO is actually the most values aligned organization to provide these loans, right? They're like probably going to be the best APR in the ecosystem because the DAO is the borrower, it's made up of the borrowers, so they're incentivized to provide good terms. And then the DAO is actually earning yield on those loans. So it's actually increasing that treasury or really that match that's going out to serve these locked hedgies. Let's say it's a 30% match. Well, if you're earning a 20% yield over the year as the DAO, you're really only spending a 10%, in Fox to get all of these benefits that we talked about before. So yeah, potentially, as Willie says, a big win-win for both the borrowers and the DAO. And it doesn't require that much capital up front. And again, we're hoping to bring in some friendly kind of ecosystem players who are willing to kind of seed this market. And then we have that market dynamic where anyone can serve these loans. And what's cool is it actually creates it turns the DAO into its own bank. It actually turns every DAO into its own central bank that sets the interest rates, kind of the backstop liquidity for the ecosystem. So yeah, it creates a buyback program if anyone defaults. It provides yield to the treasury. Pretty rad. And the other way that we've actually been exploring with a couple other DAOs in the Gnosis ecosystem is is bonds. So it was interesting. I didn't realize you guys were kind of looking at Arbor and Hourglass, but the DAO can just lock up their tokens in a hedgie and use this same mechanism that Nifty is providing that we're initially building out for contributors. So perhaps something for us to talk about, Kent or Willie, if you guys are interested. I'd love to pick your brains at least.
Yeah, and me and Willie, and then the rest of our Treasury Management and Diversification Committee, I think would be interested in hearing that, along with the broader tokenomics work stream. It's really interesting that this sort of new financial primitive that you guys have created here, in the context of just okay, I have a Bored Ape JPEG here, and I'd like to unlock some value out of it and borrow against it. That's cool, but it seems to take on a lot more. It becomes more potent and more useful and powerful potentially in the DAO context.
Totally.
It really escalated quickly. Once you're talking about DAOs being their own central bank, that is powerful stuff.
Absolutely. Yeah, we were talking about creating our own IMF, the InterDAO Monetary Fund. It just provides backstop liquidity for each of these DAOs to then provide liquidity onto their contributors. You have this virtuous cycle of people contributing, getting upside in the company, a long-term incentive alignment, being able to borrow against that. The DAO provides that loan, and then there's some larger IMF that's providing basically really low interest rates to all these DAOs for operating capital and for lending. I think it'd be really cool.
It's like a non-evil, involuntary, and cool crypto-based IMF.
And it's decentralized.
Decentralized, yes.
Because nobody controls the interest rate. Anybody can push the interest rate lower if they want to, right? Anybody who has the capital can play the game. There's no barriers.
Very cool. Let's see. We got about 5 minutes here. I want to open it up for some questions too, if anybody has any. But one question I had, and kind of circling back around to the raise and everything. So moving forward, I guess 2 questions. Where is the platform right now? Is it actually in prod right now? Is it usable? And then question 2 is what are your plans for deploying that capital from the raise?
Yeah, so it is in prod. We're on mainnet Ethereum. It's live. We've got, I think, maybe 10 or 15 collections that have offers against them currently. You can, connect your wallet and see if you have any offers available. We're about to release meta transaction offers, so gasless offers, and so we expect to see the breadth of what has offers against it just kind of skyrocket here in the next little bit of time, next sprint probably. It's also on Gnosis chain, or not Gnosis chain. It's on Gorley currently, so you can play with it with some test ETH, stuff like that. And then we're actively I'm writing the deploy script today for Gnosis chain, and we're likely going to be wiring up the front end in the next sprint as well. So very soon to Gnosis. The deployment of capital, it's mostly for salaries. We've got just about a couple of years of runway. So we're pretty excited to have a good shot at really making something significant here. And that's mostly what we have, marketing, not too much. The company itself is not providing liquidity. We've got some other liquidity available that we're, kind of seeding stuff with. Yeah, that's kind of where we're at.
Excellent. Cool. Any questions for Kevin? Raise your hand, jump up on stage, or ask him in the chat. While we wait on any questions, can you speak briefly to audits? What was the audit process like for your mainnet implementation?
Totally. Yeah. So we, first of all, we're heavily tested. We've got, unit, fuzz, and integration tests on every line of code. And then we did our initial audit with QuantStamp. We followed that up with an audit from Sherlock. And then we did kind of a diff review. So kind of a third audit with QuantStamp as well. We've got DNSSEC on the front end, and we're actually going to be looking at doing a kind of V1.1 on the protocol, where we've got a audit in upcoming with Sherlock again, but this time it's going to be a full kind of competition style, like a code arena style audit, and hopefully they'll be providing insurance off of the back of that. So it'd be up to $10 million of insurance on assets in the protocol. I think that hits the kind of high level security points.
Nice. You can never have enough audits.
Yeah. Yeah, says the auditors. But yeah, if anybody who's listening is interested in doing in the product or in doing a user interview, it'd be super helpful for us to like nail down the form factor. We've gotten to talk to a couple people from the DAO and a couple people from another DAO in the Gnosis chain space, and it'd be, one, it'd be really great to hear, especially like what kind of terms would be tolerable for you. What would you be expecting to see, and what kind of form factor you want as we build this out, where it is usable right now in its current form, like the mainnet space, and what we'll build onto Gnosis chain. But we'd love to make it really tailored and smooth. It's just super sexy and easy to use.
Awesome, man. Well, hey, thanks for stopping by, Kevin. Really appreciate it. So if people want to, and I think I can say confidently, there are already Foxes that I think have a real interest in this. Perhaps that will increase as more people are aware. But if people want to learn more about the site, let's see, that's just been posted in the chat. But if they have questions for you, can they just ping you here on Discord?
Yeah, absolutely. Please feel free to DM me. Just send over a friend request and we can jam.
Awesome, dude. Well, congrats again on the raise and moving this forward. It's cool. This is already in production. By the way, guys, if anybody plans on being at ETH Denver, I can almost imagine you certainly will be there as well, Kevin.
Oh yeah, I'll definitely be there.
Cool. So you have a chance to maybe ask questions in person. It's only November, but early March will be here before we know it. That's going to be fun. Yeah.
Well, just want to say super thank you. Really appreciate it, Kent. Thanks for letting me get up here and chill for a little bit. Means a lot. And thanks everybody for sticking around and listening. It's been fun.
Hey, thanks, Kevin. Talk to you soon, man.
All right. Cheers, guys.
Right on, guys. Well, yeah, another fun session. The other thing that makes me optimistic about this space is just like getting off these calls or listening to other DAO calls and seeing the innovation that's happening right now here at the DAO, and then externally with projects like Nifty Apes. It's so cool. This space is unstoppable. Anyway, thanks for listening. Again, if you have any questions for Kevin, let him know here on Discord. If you have any questions about what we're doing in tokenomics, we have the chat or the channel. Yeah, that said, let's maybe get DeFi Girl back up here and or DeFi Girl, Lo-Fi Radio. And everybody have an awesome night. Take care.